Good afternoon, everyone. My name is Bill Hampsh, and welcome to the April 21st Capitol Medical Society's Lunch and Learn program called What's the Cure? Proper Reporting and Use of Your COVID Funding. I am the practice administrator for North Florida Women's Care and serve on the CMS Lunch and Learn committee. It's wonderful you've joined us today for this program. We are going to hear from CPAs Nadia Beatty and Jay Hutto, who provide services to quite a few local medical practices. They will help us get up to speed on how to track those funds we received, the reporting requirements, and more. But before we start the presentation, I'd like to introduce our speaker, Liz Tila from TMH Federal Credit Union. Liz is the Vice President of Marketing for TMH Federal Credit Union and has worked for the credit union for about 11 years next week. She is certified credit union financial counselor and is currently pursuing her certified business lending certification by the Credit Union National Association. Liz, would you please share with our guests what they need to know about TMH Federal Credit Union?
Thank you, Bill. I appreciate the intro. As Bill stated, my name is Liz Tila. I'm with TMH Federal Credit Union. TMH Federal Credit Union has served the Tallahassee healthcare community for over 58 years. If you work in healthcare, you can join. We offer a variety of savings and checking accounts, as well as lending products. April is a big month at TMH Federal Credit Union. It's Youth Month. Your healthcare credit union is matching the first deposit up to $25 on kids clubs and teen accounts in the month of April. Plus, kids club and teen members will be entered to win some awesome prizes. TMH Federal Credit Union has a great Visa promotion going on right now. We are offering 2% for 21 months with no balance. What was that? With no balance transfer fees. So definitely want to take up jump on this great promotion. So don't miss the great opportunity here in 2021. Thinking about purchasing a new or used vehicle, TMH Federal Credit Union has rates as low as $199 on both used and new vehicles up to 72 months. And last but not least, this week kicks off our 3-4-5 promotion for the summer. Personal loans as low as 3% for 4 years on a minimum of $5,000. This is an awesome, great opportunity to do some debt consolidation or some home equity, home projects. So if you're interested, please give me a call. There's my information and my email. We'd love to have you as a member. And once you're a member, your immediate family is also eligible for membership. Thank you.
Thanks, Liz. We could not have done this program or any of our programs without the sponsorships like yours, and we appreciate you and the other team members at TMH Federal Credit Union for your support. All right, it's time for our keynote speakers, and I'd like to go ahead and start by introducing both of them. First, I'd like to introduce Jay Hutto, CPA, who's a partner, has more than 25 years of experience providing personalized accounting services, including auditing and tax services, business consulting, business valuations, and litigation support. The leader of the firm's healthcare services team, he has significant experience addressing issues, maximizing revenues, and minimizing expenses for healthcare related entities, which is a great thing to help the bottom line. Well, he's a member of the Healthcare Financial Management Association, the Medical Group Management Association, and the Healthcare Administrators Association. Jay has received a Master's of Accounting and a Bachelor's of Science in Accounting, both from the University of Florida. Secondly, we have Nadia Beatty. She's also a CPA and partner with the firm. Nadia has 16 years of experience working with clients in broad range of industries with a focus on serving the needs of healthcare entities and commercial companies. As a result of her expertise, she serves as an integral member of the firm's healthcare services team. She has advanced knowledge working with partnerships, multi-state C corporations, and S corporations, particularly in matters relating to multi-state taxation. Having been self-employed for several years prior to joining the firm, she has a unique understanding of the struggles of independent businesses. Nadia holds a Bachelor of Science in Accounting from the University of Florida, and we will not hold that against either of you guys for being Gators. That's okay. We love our competitors. James Moore Firm, founded in 1964, is a regional firm with offices in Daytona Beach, DeLand, Gainesville, and Tallahassee. The firm specializes in providing tax, auditing, accounting, and controllership, wealth management services, technology solutions, HR solutions, and business consulting services. Members of the firm's healthcare services team work almost exclusively on healthcare-related engagements and maintain their knowledge of the industry through the services they provide and their active involvement in local and national associations. With that, I'd like to go ahead and turn this presentation over to Jay and Nadia. Nadia, the floor is yours.
Awesome. Thanks, Bill. We're going to start out this meeting with just a little bit of fun. We have a drawing for 2 gift bags and want to take this time to kind of choose the names out of our little cup for those who are currently on the broadcast. So we'll go ahead and do that now. So the first name I have is going to be Slade Geiger. So Slade, we will make sure that you get your gift bag. And then the second name, if I can get it open here. Okay, will be Beth Smith. So Beth, we will make sure that we get your bag delivered to you this week. So we really appreciate everybody for being on the call and just wanted to show our appreciation in the form of a gift bag. So we're going to get started with our presentation because I know everyone is so excited about the topic matter. And Jay Hutto, my partner here at James Moore & Company, we're going to go back and forth and kind of talk about some things that are affecting a lot of medical practices in the state of Florida, probably all medical practices in the state of Florida and national. So Jay, why don't you share with us what the Provider Relief Fund is and who is eligible to receive those funds?
Thanks, Nadia. Yeah, the Provider Relief Fund, or the PRF, provided grants from the Department of Health and Human Services, or HHS, a lot of acronyms here, to all types of providers that were eligible. That first round went out about a year ago, and it was based on prior Medicare billings. So it just showed up in the bank account. Clients started calling, wondering, hey, what's this big deposit? There was no application process, so that, you know, it wasn't really something that was expected. Once sort of that first round happened, everybody kind of quickly got acclimated to what it was, and then started realizing that it came with some terms and conditions. So you know, that's kind of how it all started just about a year ago.
So if a provider received funds from the Provider Relief Fund, what action do they need to take currently or in the future?
Yeah, the first step was that they were required to complete this attestation. If they didn't complete the attestation, it was sort of it was implied that they would still accept the terms and conditions related to the payment. They did have the ability to return the payment, but I don't believe any of our providers did that. And then at some point, there is a reporting requirement. Now that's, you know, still kind of in limbo, but it's important even now to kind of gather up those eligible expenses and identify that lost revenue so that it can be tracked and then ultimately reported. Those eligible expenses kind of come into 2 buckets. You've got the COVID specific cost, and then you've got some general and administrative costs that can be applied to the Provider Relief Fund. In determining your costs, there is a limit on compensation of $197,300. So that can come into play with physician salaries and things like that. But that number does not include fringe benefits or any other indirect costs related to the, you know, those personnel costs. Lost revenue can be determined one of 2 ways. The first way would be comparing your 2020 revenue to your 2019 revenue, or you could actually use a 2020 budget if that budget was approved before March 26 of 2020. And then HHS does provide some frequently asked questions and details on the reporting requirements and examples of these allowable expenses for the PRF on their website.
So speaking of their website, what's the status of the reporting portal?
So originally it was supposed to be that you would start applying January 15th of 2021 and for the 2020 period, and that would end February 15th of 2021. So obviously those dates have already happened. Currently the portal is really only available for providers who receive one of the payments exceeding $10,000 in aggregate to register and kind of create an account so they know sort of the status when they actually, get their act together and allow for this reporting. When you complete the registration, you'll be notified, when you should go ahead and start entering information into the reporting portal and report on the use of your PRF funds. But currently that functionality doesn't exist. There is no deadline, obviously, for completing registration in the portal because, again, there's really the timetables that they originally said have kind of been scrapped, and they haven't provided sort of new timetables. Recipients will, at some point, receive notification about when they should start completing that second step of submitting that reporting requirement information and how they use the funds. And they have a Health Resources and Services Administration, so another acronym, or HRSA, and they'll send a broadcast email to everybody who's registered, and kind of set that timetable for when you're going to report basically 2020 and at least the first half of 2021 at sometime in the future. At this point, they recommend, or they just kind of estimate that it'll be about 20 minutes as to how long that registration process will, you'll need to spend on completing it. But it does have to be completed in one session. So it's important to kind of go to the HHS website for the Provider Relief Fund, identify everything that's going to be needed to be entered, and then have it all there ready, because you can't save or partially complete registration and come back to it. But you have to have all your information ready to go and register in that one session to get completely registered, so you can be notified in the future of sort of, what that process and timeline will be. HRSA did provide a PRF reporting portal user guide that addresses things that, are issues that can be experienced. Most of those issues are kind of related to if you have other subsidiaries and or if you have a change in ownership and things like that. There is also a PRF allowable expenses overview, which is helpful for kind of clarifying what allowable expenses are and what will be reimbursed or not reimbursed, or at least eligible for the PRF. And then it's also real important to kind of identify those other sources of funding, because you can't double dip in this. And so if something's funded by another source, it can't then also be used for the Provider Relief Fund, when you get ready to report those costs. So that's also important to kind of identify what those are and be prepared for that. We're recommending that providers go ahead and get all of those allowable expenses and that lost revenue identified now so that they're ready. We do have some clients that have done that and, kind of share their spreadsheets with us and kind of how they're identifying those things. Because while there is guidance, it's not very detailed. And so it's kind of important to sort of start that process now. Obviously, the original deadlines have already passed, so we're concerned that there may be, once they come out with a timetable, that timetable might be pretty tight. And then with this whole thing about trying to identify expenses by source of funding, we're recommending that clients effectively start with total expenses and then say, okay, well, this bucket or these expenses were used for this source, whether it's the PPP or ERC or whatever, that you identify those expenses by bucket, so you're not, going to get in trouble later for using them in multiple areas. The other thing that's interesting about this reporting is that they have told us that the unreimbursed expenses are identified or considered first. So before you even get to the point of identifying lost revenue, you have to enter in the unreimbursed expenses related to the PRF. So when you get to the reporting process, the first thing you're going to enter is your unreimbursed expenses, and then you'll move on to the lost revenue. And then they also told us that there's going to be 2 reporting periods. The first reporting period was for 2020. So the first reporting will be, effectively those expenses or lost revenue incurred during calendar year 2020. And then if you still have additional expenses, you'll enter those for January 1st to June 30th of 2021 with a reporting due date of July 31st, 2021. Now, we don't know yet if that July 31st, 2021 date will still hold, because who knows when we'll be entering 2020 at this point. But, I would say it's probably fair to assume that they'll give, some leeway if they don't get on that relatively soon. We have, James Moore does have a detailed article on the whole provider relief fund reporting process on our website at jmco.com. So that might be helpful for people who kind of want to get more details as to, what expenses or lost revenue information they might want to start pulling together now.
So just like everything else that's happened over the last year and a half, we're still waiting on a lot of information and don't have all the details yet for the reporting on this, it sounds like. So one of the things that we've gotten the question on a lot recently is regarding audit requirements, that there's a lot of information that if you receive a certain amount of funds, that there's an audit requirement. Can you tell us a little bit about that and what that would entail?
Yes, there is an audit requirement, whether it's a single audit or a program specific audit, and it's required for those recipients that expend $750,000 or more of federal funds, including the PRF, during the year. So if you have more than one source, that generally puts you in the single audit bucket. But if the PRF is your only, if you're a for-profit and the PRF is your only source of federal funds, then you can do what's called a program specific audit, which is just limited to just the PRF. And it's also based on what you expend. So, we usually think about the revenue side, that, if I received it in 2020, then I may be subject to single audit. But if you get to the point where it's kind of puts the importance of that reporting in play, because if you determine that you expended $500,000 in 2020 and $250,000 in 2021, you may actually be able to avoid the single audit, because ultimately you report that you actually didn't expend more than $750,000 during, a reporting period. So if you can actually spread that 750 or whatever the number is over 2 periods, so that you don't have more than 750 expended in a single year, then you could actually potentially avoid this single audit or program specific audit requirement. So that's another kind of planning, not that you can plan at this point really, but that is a potential planning opportunity for addressing the audit requirement. And then go ahead.
I was going to say, lots of puzzle pieces to put together between all the different programs, reporting period. Do we pick up this expense this year, next year? I didn't mean to interrupt you. Sorry.
No, that's completely true. And the PRF has a what's called a compliance supplement, and it's a CFDA number. It's 93.498, and it provides kind of the requirements of the audit. And one interesting requirement is that the auditor must essentially attest to the reporting, that the reporting to HHS has occurred and that it's consistent with the program specific audit. So as a result, we actually can't do audits right now because the reporting process hasn't started. So that is, then that has to be effectively completed, so that you can, in your audit, state that the reporting has occurred and it's consistent in the, in the amount that it was expended is consistent with the audit that you do and you submit separately to under the single audit requirements.
So how about the tax and accounting treatment of this funds? As we're in the middle of preparing tax returns, people have probably already prepared their tax returns. Can you tell us about the accounting and the tax treatment for those funds?
Yeah, and that's also confusing, because unlike the PPP forgiveness, which is non-taxable, the PRF funds are taxable. And if you're a cash basis taxpayer, they're taxable, in the year you receive them. For financial reporting purposes or GAAP basis reporting, the provider would record it either as deferred revenue if they're for profit or a refundable grant liability until the eligible expenses or lost revenue are incurred. So you kind of have this matching. So as you incur either the expenses for PRF or you have this lost revenue, you don't pick up the income until you've actually had one of those occur. So there's a matching of those.
So what are some actions that providers can take now, anticipating of the reporting portal opening and anticipating of, potential audits? What are the things they need to start gathering and doing at this moment?
Well, first thing we're recommending is everyone go and register on the portal so that they're updated and they know the kind of the status of the reporting process when that information becomes available. Also, accumulating the information that's required for what's going to ultimately be the reporting. So there's demographic information, there's even non-financial information that they're going to need to submit at some point. And then obviously, because of that whole, you can't double dip, you've got to identify all of the different sources that you may have had, COVID related or not, that you can kind of spread your expenses into those different buckets so that when the reporting starts, that you have your PRF bucket, your PRF column ready to go, and that information ready to be entered in. And then there's also going to be some level of, if you have an audit requirement, then we actually have multiple clients that were kind of queued up ready for the single audit because they received well in excess of 750, but we're just kind of waiting for the reporting process to start so we can kind of start the single audit process as well.
Okay. How about any updates from HHS on PRF status? Do you have any updates on that?
Well, we've probably at this point gone over most of that information, but they do provide on the HHS PRF website, they do provide information on the reporting requirements. There are, a lot of resources. So you have the terms and conditions, where originally, if you accepted this money, you had to attest that you were going to use it in compliance with the requirements and that it was effectively subject to recoupment at some point in the future. So, at this point, reporting only is going to be required for those receiving more than $10,000. But I would expect that that's almost everyone who received PRF, at least based on the numbers we've seen. So being ready for reporting, identifying those expenses, and then ultimately being knowledgeable of what the guidance is available from HHS and being ready to go is probably the best course of action.
Okay. So you mentioned recoupment. How about guidance on the recoupment of the PRF funds that maybe weren't expended on healthcare expenses or for lost revenue for those practices out there that had a booming great year and can't expend all the funds?
Yeah, they have updated these provider relief fund frequently asked questions multiple times over the last year. The most recent update was on April 1st of 2021. And they reiterated that, the PRF, if you receive PRF funds and they're not fully expended on healthcare expenses or lost revenue attributable to the coronavirus at the end of the reporting period, which at this point is June 30th, 2021, that they must be returned to the Department of Health and Human Services. So that's been said from the original terms and conditions, and it's still being said today. So it is a real concern that at June 30th, 2021, checks are going to have to be written back effectively to HHS. So that's why it's important to kind of work through this process and be prepared and then start thinking. I mean, if you do have any issues meeting the requirements, like we have some a practice that's effectively hospitalist.
Mm-hmm.
Well, they don't have a lot of expenses other than the doctors. So, and then the doctors kind of get limited. So, for them, it's kind of identifying, what are they going to actually be able to submit, and once the reporting starts, to kind of meet that requirement. And I think we've helped get them there, but it was at least a little bit of an effort to get there. And then the HHS has certainly informed everyone that they are authorized to audit PRF recipients. So even though you may not have a single audit requirement or a program-specific audit requirement, they could still come knocking and want to see all your paperwork, all your documentation, and make sure that there wasn't an amount that should be returned to the HHS.
Between PRF, PPP, ERC, there's gonna be a lot of audits and checking of information going on, I feel like. So
absolutely. But in addition to PRF, we know there's some other programs out there, and certainly they helped a lot of providers. And I know you're part of our PPP team. So let's talk about the Paycheck Protection Program, or PPP, and the Employee Retention Credit, or ERC. So a couple more acronyms. But first, could you give us an update on the PPP round 1 and now round 2 funding?
Yeah, and as we talk about this, I think it's just important to really think about those buckets that Jay was talking about, and having, that Excel sheet and determining what expenses are going to be allocated to what program and the dates, because this all kind of comes together. But an update for PPP is that PPP is still out there. PPP is still active. Round 1, if there are any practices or entities that haven't applied for round 1, you have until May 31st to apply. The beauty of the round 1 program is that you just have to have, uncertainty, not maybe necessarily a reduction of revenue during that period. So we have some businesses that have approached us and said, hey, we want to still apply for round 1, can we? And the answer is absolutely yes, but we have until May 31st to do it. And then of course there's round 2, which is open also until May 31st. The rules for round 2 are a little more stringent, of course. You have to have a 25% reduction in gross receipts in a certain quarter for 2020, let's say the first, second, third, fourth quarter, compared to that same quarter in 2019. The round 2 definition for eligible expenses has been expanded. So you can actually expend those funds on COVID-19 supplies, protection gear, and some other costs. And again, this is really important as we talk about those buckets, and what you're expending those funds for is to really analyze that and make sure that you're maximizing each expenditure in those buckets. Round 2, of course, is still very similar to round 1, that you have to have 60% of the funds expended for payroll purposes, and then the 40% qualify for, those other expenditures that are qualified under the rules. So PPP hasn't died yet. I keep hoping it will kind of fade out, but it hasn't. And of course, there's always the talk of, additional round of funding, but nothing has been finalized at this point in time.
So I only had one client, Nadia, that returned their money. Everybody else has kept their PPP-1 money. I know now most people have gotten through the forgiveness process for PPP-1, but I know there's some bank issues where some banks actually haven't kind of opened up their forgiveness portals. But have there been any changes or update to the forgiveness process?
So I think the most significant change is just the simplified forgiveness application for any loans under $150,000. It's a form that you sign, you attest that you spent the funds on qualified expenditures, give it to the bank, and then hopefully the PPP loan goes away. Of course, you still have to have your documentation, your proof of how you spent those funds, but it's just a much easier process. But you're right, some of the banks haven't opened up their portals. We've had clients that have gotten letters saying, hey, your loan is due, and the bank says, no, this is a mistake. And then, of course, we have clients that have received, the PRF funds, the ERC funds, the PPP funds, and they're like, we're not going to go through the forgiveness process until we figure out all of the pieces of the puzzle, which is really, really important, because you can, I don't want to, manipulation is a negative word, but you can pick and choose which bucket, you put those expenses in to make sure that you're maximizing forgiveness or the PRF application, whatever it may be. So not a ton of changes. The forgiveness process hasn't been as bad as I was anticipating. We've had a ton of clients that have gone through the process and been forgiven. But it's when you're trying to juggle all the different pieces of the funding that are out there.
On the loans less than 150,000, what's really the big differences between the simplified form and the regular form? Have you seen that?
Yeah, documentation that you have to provide to the bank is the biggest difference of not having to provide your W-2s, your W-3s, your FTE calculations. It's just a documentation process.
All right, and now what's become seems like a current huge issue or topic and another big source of needed funds for companies and practices that have been impacted by the coronavirus is the employee retention credit, or the ERC. So give us some information about that and why it's such a big deal now.
Yeah, so the ERC, employee retention credit, has actually been around for a while. It was part of the CARES Act last March, but it kind of got ignored because there were certain rules that if you applied for PPP, you couldn't apply for the employee retention credit. So most people went most businesses went the PPP route because it was just easier. The funds were readily available, the application process was easier, and we kind of put the employee retention credit on the back burner. But it was there during that whole period. But what has changed is that there's 3 different acts that actually regulate ERC, and what they've said is, hey, you can actually apply for the ERC even if you receive PPP funding. So it changed the whole rules of the game at that point. And that's what we've been dealing with probably for this first whole quarter of 2021, is saying, okay, do we qualify for the ERC? What's the application process? How do we balance those expenses that we use for PPP versus ERC? And the credit amount is actually pretty substantial. So the credit for employees during March 13th through December 31st is a credit of about $5,000 per employee. And this is a refundable credit. So there was some misunderstanding that the amount was only to offset, Social Security, Medicare taxes. And it is, but if your credit exceeds those taxes, then you actually get it all back in a refund. So starting January the 1st of 2021, this credit actually increased to $7,000 per employee for both the first and second quarter. So it's about a total of $14,000 per employee. And then there was a third act that was added on that actually extends this for the third and fourth quarters of 2021 if you meet certain qualifications for additional credits of that same amount. So it's a pretty large credit that entities, practices, businesses can apply for.
So we want to make sure that if they haven't applied for it, that they, at least consider whether they're qualified for it. So give us some of the qualifications for the ERC.
Yeah, there's 2 main eligibility criteria. Number 1 is, hey, was my business required to shut down or suspended from a COVID-19 order? So that's number 1. And if you meet that qualification, then you automatically qualify for the ERC credit. Let's say that your business wasn't required to shut down. And in Florida, we're in a little bit of a different situation because we weren't shut down for that long. And so most businesses were able to open up at a part-time basis, reduce capacity. So the second criteria is, okay, so we were able to open. Did we have a decline in gross receipts? And the gross receipt decline for 2020 was at least 50%. So if you had a 50% decline in gross receipts quarter to quarter from quarter of 19 compared to the same quarter in 2020, then you qualify for 2020. For 2021, that eligibility, that decrease was reduced to 20%. So in 2021, if you look at the first quarter of 2021 compared to your first quarter of 2020, and you had a 20% reduction in gross receipts, then you qualify for the ERC credit. So you're going to compare quarter to quarter for the prior year. And then you can also do an annual comparison, but usually it's the quarter to quarter comparison that maximizes the ERC credit or makes you eligible for the ERC credit.
Okay. And then you mentioned under the old rules for 2020, you could take the ERC and PPP, or you could not take them. But tell us a little bit about those changes.
Yeah. So as we stated earlier, for 2020, if you had applied for the PPP loan program under the first set of rules, you weren't eligible for the ERC. But in December, those laws changed and it said, okay, you've applied for PPP, but you're still eligible for the ERC credit. But there are a couple of restrictions on that. So what you have to be careful of is that double dipping, those buckets that we talked about earlier. And so if you use wages for PPP forgiveness, you can't use those same wages to apply for the ERC credit. So you have to be really careful. And during this process, it's actually beneficial if some companies haven't, or some entities haven't applied for forgiveness on their PPP loan, because we can really play with the dates and the expenses to maximize both the ERC credit and the PPP forgiveness. So you have to be really, really careful about that double dipping. And then we put in the PRF funds in there. And so now we've got 3 buckets that we have to play with and play with the expenses. But the cool thing about this is that the credit is retroactive. So you can apply for it for 2021. If you've already filed your first quarter 2021 payroll returns, you can amend those and get the credit. And then you can go back and amend your 2020 payroll returns and receive the credit for the ERC by amending those returns. The one thing that you have to be careful of is that if you have filed your 2020 return, or you're in the process of filing your 2020 return, if you amend those 2020 payroll tax filings, you're probably going to have to amend or change your 2020 income tax return as well, because there's a reduction of wage that has to happen with the ERC credit. And so another thing to remember is that the ERC credit, you can't use wages that you use for the FFCR paid sick and leave time, which was a whole nother program. So again, it's just being careful of that double dipping. But the most important thing to kind of take away from all of this is that there's a lot of programs out there that you've potentially applied for, can apply for, and just to really do a deep analysis of what expenses you're using for each of those programs to make sure that you're maximizing what you receive as an entity or a business.
So now I know I've seen like PPP, millions of dollars coming through to businesses. What are you seeing on the ERC as far as dollars amounts? Kind of examples as to what you've seen clients be able to get up to this point.
So we're seeing anywhere from small businesses who have a few employees of $20,000 to $30,000. We're seeing all the way up to $200,000 to $300,000 per quarter, depending on the number of employees that they have. So this is just a function of your employees, and you're paying them more than $10,000. You're getting the 50% or the 70% of their wages. So the number can be significant. I mean, that's just for one quarter. You have to go back and analyze your 2020 quarters and then potentially the rest of 2021. And as long as you meet those requirements, the reduction of gross receipts, it could be several $100,000, per business. Medical practices, of course, are usually heavy on the employee side. So those employee numbers are a little bit higher, and you could qualify for the $5,000 or $7,000 credit per employee. So those numbers can add up really quick, Jay.
What about firms that use like leasing or payroll services?
They still qualify for the ERC credit. It's just you got to jump through a lot more hoops with the leasing company, those payroll services, to qualify for that ERC credit.
And I've also heard that some of them are charging kind of percentage fees and some kind of odd things. So I would definitely recommend that people, ask about that up front so you're not surprised, thinking that they would have done that automatically, but now find out that they're doing it at 30% of the refund amount, or something along
Yeah,
those
that was
scary.
That was a shock to me when I heard that payroll companies were actually taking a percentage of the credit. And I was like, wow, it's just an amended return. You're not entitled to that money. So definitely ask the questions about if you're using a payroll service, what they're charging you, if they're going to take a percentage of the credit or not.
Right.
Yeah.
Well, we appreciate everyone joining us today, and these are all important topics for providing additional cash for your practices. If you do provide or you do submit any questions, which you can, we will answer all of those by email, individually and personally. So we do appreciate your attendance, and certainly we will get back to you with any of those questions. And Bill, back to you.
Thank you, guys. Appreciate both of you for clarifying this information and reviewing all the tax implications for it. As a fellow CPA, I even struggle with it on my own at times. And if it wasn't for resources like you guys, Capital Medical Society and MGMA, I don't know how I would have gotten through it. And speaking of, just for a quick plug of you guys, on the jmco.com website, there is a resource to connect for the COVID-19 power lunches. I have watched several of those, and you guys do a fantastic job, and appreciate the resources you provide our community to help us navigate some of these challenging regulations and so forth. So if you didn't get enough of Nadia and Jay, they're going to be back, obviously by popular demand, at least for me, to have you guys hear them next month in May, for the opportunity to listen about taking your practice revenues to the max, which will be sometime, I'm not sure the specific date, but it's usually the third Wednesday in the month. So check back your inbox for information to register for that program. Again, thank you both, as well as thanks Liz with TMH Federal Credit Union for their support, and wish everybody a wonderful afternoon.